Trump administration, as it warned, is moving ahead with tariffs on steel and aluminum, including imports from Canada. And there's still the risk that Trump will impose a much broader set of duties on Canadian goods shipped to the US in less than a month's time. Let's get more from Colin Cieszynski, Chief Market Strategist at SIA Wealth Management. Colin, thanks very much for coming on the show. Not a decisive reaction in stocks today to these new tariffs.
No, I think the tariffs, at least for now, were kind of priced in. And it's important to remember that, I guess, since a week ago, we had a huge reaction to broad-based tariffs against everything and a more muted reaction this time to tariffs targeting a very specific sector that has been targeted before. It would be like the U.S. when they come at us with tariffs, it's usually steel and aluminum, or it's softwood lumber, or it's something very specific like that. And that I think people are a little bit more used to, and we're seeing that with some of the steel makers and automakers. Honestly, are not doing. They're pretty quiet today.
Yeah, maybe we could put up Cleveland-Cliffs, for example. It rose. The U.S. steel maker, it rose yesterday, or maybe U.S. Steel X, because it's interesting. I mean, it will increase costs for U.S. industry, and we know that Cleveland-Cliffs down today, and we know that these tariffs are likely to increase costs for consumers, at least at the margin.
That's true, and it was interesting when we had Fed Chair Powell out talking today about not seeing the need to cut interest rates further. I mean, this potentially could be inflationary in the U.S. So when you start increasing the costs of everything, and clearly they want to collect the tariffs, to offset some of their tax reductions, potential tax reductions elsewhere. So I mean, certainly they do want to continue trading with other people. So it's there's quite a bit going on there. But yeah, I mean, there is a potential that we could see inflation start to pick up on this.
How are you playing the market right now, Colin? What sectors do you favor?
Right now, in terms of our capital flow and relative strength analysis, we've seen over the last little while that capital has been coming out of technology-related sectors, and it's been going into more things like consumer discretionary as well as resource stocks. So just as an example, today we've in Canada we're seeing Shopify, which is a stock we hold in portfolios we manage, is up about 4% today on earnings, but we are seeing pullbacks today in Canada in Celestica and BlackBerry. BlackBerry is another stock we hold in some of our portfolios. But where we are seeing some really nice gains is in the energy sector today, where we've had a solid gain for the price of oil. And over the last week or so, we've seen a lot of capital rotating into precious metal stocks as well, with the rally in the gold price up above $2,900 an ounce.
Just talk to us a bit about Shopify. You mentioned that you do hold it in some accounts. The shares, of course, have been more than double since last August. You're not inclined to lighten up after those big gains?
No, not at this point in time. With us, we track our relative strength, and as long as stocks are continuing to remain highly ranked relative to their peers, winning head-to-head battles against other companies, and continuing their trend, we continue to hold them.
Give us your view on U.S. versus Canadian equities right now, Colin. Do you have a conviction that it's better to be in America than Canada?
Well, at this point, what we're seeing in terms of our asset class rankings is that U.S. equities have been number one, Canada has been number two, and international equities have been down farther. So even though the U.S. has been outperforming Canada has actually been doing pretty well still relative to other countries. And we've seen this in recent days when Canada has come under heavy threat of tariffs. We've seen a couple things happen. One, the dollar has gone down, which has provided some support for Canadian stocks. Commodity prices have gone up, particularly precious metals has helped to provide support for Canadian stocks as well. And it was quite interesting. Last Monday, when the biggest of the tariff fears were out there, what we saw in Canada was the areas that outperformed were the ones that were really heavily domestically focused. So things like the communications companies, the utilities companies, the ones that are really, really domestically focused. And to a certain extent, we're seeing that a little bit more as well in the United States as well. Kind of more domestically focused companies seem to be doing better and attracting more capital in times of trade uncertainty.
Colin, thank you very much indeed.